Alright, ladies and gentlemen, MrSotko here, and welcome to How to Read a Candle Chart. So I've arbitrarily pulled up the Ethereum chart on GDAX as a reference. The candle chart is sort of an 18th century Japanese construct of the rice trade that somebody had invented. All of these bars are called marubozu. As you can see, I don't speak Japanese at all. That's why candle chart is just so much easier to say. So these are technically white and these are technically black. In this case, they're orange and green, but originally they were just white and black. And then you can also see little danglies coming off. These are lower and upper shadows. And the tiny little ones that represent no change at all, that typically have upper and lower shadows on them, are called doji. And so a candle chart gives you a really quick representation of how the market is doing. So as you can see, there's a lot of people selling here. So all this is dominated by sellers and it's pushing it down. You can see people buying there. And if we go to the 1 minute, you should have seen an upper change there. So the 1 minute shows in 60 brackets here, so which is representative of 1 hour. So if you go to 5 minutes, then you get what, like 3 or 4 hours, or 6 hours? Yeah, 6 hours. Math, you know, silly me. But so we can see things moving around. Now these upper and lower shadows are a little complicated, but basically this ended right here at approximately $306.16. And this phase of a minute also was at the same price. However, it would have been all the way up here. This is what the buyers drove it to. But there were sellers at this point that drove it back down to this price here. So that's what the shadow represents. It really doesn't represent the final price of that minute. And that's what these all represent, is the final price within this 1 minute period. So at this minute, it was $306. At this minute, it was $306.36. So the green is represented by strong buyers. There were more buyers than there were sellers in that period, and therefore the price increased. And in this period, there were more sellers than buyers, and therefore it's colored orange, and the price decreases. So that is all representative of this and this. As you can see, these are all the people that, not necessarily individual people, but the amount of Ethereum that will sell at this price. So this could be just one person with 620 Ethereum, or it could be many people with 623 Ethereum altogether, just bidding at $301, and that's what they want to buy it at. So there's a ton of buyers right now in this price, so it should be going up. It has been going down pretty thoroughly. All of them are down 6%, 8%, almost 9% there, almost 7%, and almost 12%. So everything's down right now. So usually when things go down like that, people will start buying because they can make a quick buck and then sell it once it goes back down again, or rather once it goes up, excuse me. And so you can see how many people, so that can give you a read on the market too. There's so many people that want to buy right now. Certainly the price is going to increase. Not always, but it looks like there are a lot of buyers and quite a bit of sellers too. But as you can see, that just bought a lot, and that raised the price up like this. So the candle chart is quite helpful. Especially you can look at the different times and see, oh, we're in a dip, so likely it's gonna go up from here. Not necessarily, but likely it will, and now would probably be a good time to buy, because if it makes it all the way back up to $315, you could sell, make a quick 15 bucks, or however much Ethereum you have. So you can kind of get a really good read on the market with candle chart. One thing that a candle chart doesn't do for you is tell you what happened exactly within that period of time, because even if we bring it back to a minute, we see that there's quite a bit of sellers, but we don't see where it went. Did it go up and down and then up and down and up and down and then it went down? Because this is just a final price of what was in that period of time, in that 1 minute slice. So it could have gone up and down 1,000 times within a minute, you know, which is a huge exaggeration, but it could have, but just ended here. So that's why I like to have when I'm sitting around and like day trading, I like to actually have Coinbase up as well, because Coinbase um, has a pretty good bar graph, rather, like a line graph here. Um, Now, Coinbase does too, but I don't like theirs as much because, as you can see, you have this pointer where you can point where you want it at, and it doesn't really give you a completely accurate, like, is that on the top or is it not? I have my mouse in the way, I can't even tell. So I don't like GDAX's line graph, so instead I like to go to Coinbase and read their line graph because I can put it on today, 1 day, and I can read it exactly this minute and to the next minute, to the next minute, especially the hour graph, of course, that's minute by minute. And it just gives you a better read on what exactly happened as it went up and down dramatically. Whereas the candle chart, 1 minute and 1 hour that went by, it's a little harder to read. Of course, it's the same graph, but you don't get those dips as well. You don't get to read the exact dips as much. And so that is the basis of a candle chart. Now, when you see, if there was like a big dip or a crash in the market and you see shadows on a lot of things, I don't think I can go back far enough to really show you a good one, but it shows when you start seeing a lot of them, you'll start to see it even out. And that's only at a long term. So this is only even with just 1 day, that's only a couple month period. And so if there's a major crash in the market and it's just keep going down and down and down, oh, where's it going to end? If you start seeing a lot of shadows, upper and lower shadows, over the course of days or weeks, it's really starting to even out, because what's happening is that buyers are backing out, sellers are backing out, everybody's kind of getting into an even price. So sellers don't want to sell any lower than that, so they start backing out. So that starts causing shadows, and then buyers are a little skeptical, so they start backing out. So that makes it even and kind of removes the liquidity from the market and evens out the price of a stock or a cryptocurrency. And then from there, it will do something else, obviously. And since nobody knows and can predict the market exactly, unless you have some kind of insider trade or you have the power of Jamie Dimon, where you can just say something on TV and then the price of Bitcoin goes down. For the most part, nobody has any kind of knowledge like that. And if you did, then there really wouldn't be a market anyway, because it would just stay one price, because everybody would know what price it's going to be. And that's part of the fun, part of the day trade, I suppose. But that is candlesticks in a nutshell. I hope you guys enjoyed that. This was part of a question on one of my videos. They wanted me to explain candle charts a little bit better. There are some other resources. I think I'll put a link in the description below of a pretty decent website where you can go and read very detailed amounts on the candle charts. And just research a little bit more on them. For the most part, that's all you really need to know. Just the basic aspect of these candle charts, and just read them and sort of predict when the price of Bitcoin or Ethereum or what have you is going to go up or down. But hope you guys enjoyed it. If you have any questions, I would love to make a video on that as well. But until then, see you guys next time.